Welcome, gang. It is the May 2024 Patreon exclusive AMA. And we're going to be going over a wide array of topics. And before people start calling me the paper trader fraud, I am having Thinkorswim migration issues, so I can only log into my paper account. So that's why I'm in paper. Well, not that I even trade out of Thinkorswim anyways. So truth be told, my real non-paper Thinkorswim account is bullshit too. So that's always good to know. Any questions out of you guys before I jump to some of the very good questions that were posted? Or is it okay for me to get into some of this? Okay, let's do it. So maybe I'll just go in straight order. Oh God, I started with a hard one. And this came from Drew actually. And so his question, let me start sharing the screen and get this going too. Okay. So Drew's question was ANBS, how would you trade this? Would you have stayed out of the first bounce at 850 since the volume was too low? News was failed drug. So let me jump to this first. ANVS. Okay. Oh, so this was actually something I was going to end up bringing up at some point. So this is, I don't recall if this made my final list or not for the top ups, but let me dive into this. So this is kind of interesting. So this was April 29th. Okay. I hope I can do everything in this paper account. I don't have the on-demand feature, but we'll see if it becomes an issue. Okay. How would you have stayed out of the first bounce? I think the better question is, why does one presume one should stay out of the first bounce? So for a couple things, by the way, let me even back up. So this had drug data get released. It was, I believe, halted on the data. Then it came out and opened at 20. So one thing that I'll start with is what ended up happening. Are any of you guys familiar with Adam Feuerstein?
Yeah, he's like a big biotech guy on Twitter, right?
Yep. Good call, Phil. So Adam Feuerstein, he now works for Stat News. He used to work elsewhere, but he's a very, very well-respected biotech analyst. If you follow people on Twitter for trading stuff, he is a must follow. And so what ended up happening is he tweeted out something about like, oh, this data is just totally kind of like manipulated bullshit. I don't remember I would need to look at the exact timestamps, but it happened like somewhere around like 18 or 17-ish. And then just boom, he tweets it and thing just melts. And so essentially what happens with some of these biotechs is, like, unsurprisingly, a lot of data can kind of be manipulated as far as endpoints. Some people kind of move the goalposts and all this other crap. And so he comes out and tweets, as a well-respected biotech analyst, this data was kind of bullshit and everything. And sure enough, the stock ends up tanking. And so the great thing, like, one takeaway is, if you're not following Feuerstein, you absolutely should be. He's awesome. Like, definitely at least a couple times a year, he moves the market for some biotech thing. And so the first trade I would argue is just getting short on that tweet. Or the other thing that we do, right, is it's called the reference trade, where the unaffected price where this was halted is essentially like 15, 17 or so. Did I get that right? No, $15. And so we'll call it the reference trade, where something starts positive, where the news is interpreted positive. Then if it crosses over, it's like, wait a second, why is this crossing over? If this news was so good, we shouldn't be going negative. Maybe there's something we're missing and everything else. And so another good way to trade this is, one, you short on the Feuerstein tweet that the data is manipulated and bullshit. Two, you short just purely on the technicals, that this data that people thought was good, wait, clearly people are missing something. And shorting, essentially here, when we cross over that unaffected price, for either of these, I'd be using prior bar highs. And Well, not necessarily, I guess. I mean, if you were to use this level, like the 15, you can even do a tighter stop at 15. Like if I'm shorting this crossover, I can definitely just give it to 15 if I want to be tighter. Or if I'm shorting the Fierstein tweet, I can just give it to the unaffected price before that Fierstein tweet. Again, I don't have exact timestamp, so I don't recall where that was. And so that's pretty nice to catch this short for quite some time, doing prior bars to there. And so the question was, would you have stayed out of the first bounce at 850 since the volume was too low? Well, so the other thing to keep in mind is some of this volume is like hard to overly interpret just because we're getting halted. So like a lot of these aren't fully trading the amount they should be, um, it's sometimes with these halts, like you can't go by that volume if it's supposed to be a 2-minute bar, but the stock ends up trading like 10 seconds. So you don't want to get overly manipulated, like overly fooled by that. But I think the bigger thing is like, do I want to buy this bounce anyways? Because this stock is moving on news. So if I'm short, I do think it's reasonable to cover this, but I don't feel particularly enticed to buy this. Like if you do buy this, yeah, I don't think you might as well wait for the turn and buy it there. And like at the end of the day, no harm done. But this is moving on news. The bars aren't exactly getting bigger. I don't feel so compelled to buy it. Again, mostly like 80% because it's on news and we're not just getting bigger bars, nor can it really get bigger bars just because of how much we've been halting. So I don't feel strongly about the long, but even if I did, like the most important thing is you wait for the turn. And then if you have that stop, like you're just not going to get that hurt at the end of the day. And in this case, you essentially break even for flat. So even if you did buy it, I don't think it's so big of a deal. Drew, does that make sense? I think you're on here. Drew, does that make sense for ANVS for now before I move on to the others?
Yeah, it does. Thanks, Lance. Yeah.
Yeah. So then MNDR, this was on 5-1. Let me hop to this. Okay, let's take the big picture. Oh God, all of these are different from what I normally have. Okay. So yeah, this stock had kind of done the run up shenanigans. And so then you were asking me 5-1 this day. 5-1. Yeah, so I think some of these can be kind of hard to, kind of scary to go with. Like, what was the one stock? ZJYL? That like epic squeeze, ZJX, I think it was ZJYL. Yeah. And
IZF, another Chinese kind of pump play, right? Like this one was.
No, wasn't it Z?
Yeah, the one that went to like 500 or whatever.
Yeah, the one that like stupid gapped on someone. Yeah.
Oh, got it. Okay.
Yep. So like in general, after that happens, I think you need to be a little bit cautious shorting these, at least for any size. So like, I don't mind shorting something like this and giving prior bar highs, but I think after that thing squeezed like it did, you do need to be somewhat careful for this. I don't particularly like, I mean, some of these don't bounce at all. Not that this is kind of like the same bullshit as some of that stuff, but it's sometimes hard to tell. What I would say is like, if I'm short, I definitely want to cover these turns. If I do want to get long anywhere, it's again, just going for these turns where, you go limit down so many times where then once you halt limit up, I generally want to be with that reversal. And then use the prior bar lows. So this would have worked out exceptionally well. I don't think I would have gone super nut sizing. But I do think it's totally fair to buy the turn. And what I would argue with ANVS and this one, it's like people think I just hindsight everything. But if we were looking at both these tickers, both of which were super in play, like it still amazes me just how powerful prior bar highs is. Like in stuff that trends, like stuff that's trending does tend to trend cleanly, and it's so simple a system. But like I didn't make up this ticker, right? These are Drew's tickers. He's asking me these questions, and this held prior bar highs so perfectly well. Then right side of the V, we turn right. Even if you got long in here and couldn't get any stock there, even if you get long here, it still pays off so many multiples. And even with the ANVS, not that I really loved that long, again, because it was against news, but even if you still wait for the turn, you still never really got hurt, right? Like at the least you have a stop, number one. Number two, you ended up breaking even on that trade. So I do think it's just worth pointing out that like a lot of the stuff when it trends, prior bar highs is a powerful system.
Yeah, Lance, on this one, I did take this one and got in before the halt up. It was my best trade of the year. My question on it was,
Congrats.
I'm super happy with this one. Yeah, thank you. But there was no news on it. I had no idea why it was moving the way it was. So I was a little bit nervous, right? So I don't know if you've done something like this where you've seen kind of no news that I could find on the day about why it was acting this way.
Well, I think this is just in the category of kind of like the run-uppy bullshitty tickers. Is this one Chinese? Can anyone Google that real quick? But
it is. Yeah, it's a recent IPO. That's a healthcare Chinese company.
Exactly. Well, I think that's part of the issue. That's why this did this, right? Okay. And if we look at the daily, this did end up collapsing those couple days later, right? Like look, this did end up just mega dying. And so that's
2 days later.
Yeah, and so that's what the fear is and why that did it. Let me get back to this. So that's because like so the ones that do crack, I'll even go to this day. Once they crack, generally it's just like some of these have near virtually no bounces. I think this was the third, right? Yeah. So that's probably why. Like that's why did the move it did. Look how this did. We did get like, I guess, one up bar. But then it's just totally KO'd the rest of the day, which is generally the default for these Chinese unwinds. So that's why the stock did what it did, right? These never have news when these collapse. The real question is like, why did the thing go from 5 all the way up to 25 to begin with? So like if you're going to play this, like it's good that you waited for the turn, but you do want to be exceptionally careful with these because the ones on the days they do implode, which is kind of, if it's making that move, it generally is. You do want to be somewhat careful that these just straight up die. But again, if you're following the system and waiting for the turn, it really, really protects you. Does that kind of make sense?
Yeah, it was just a news thing. I did not trade it 2 days later when it melted down and died. But you see, the volume was very different. The day that I traded, the volume was very light versus that day.
When those melt, yes, the volume has been a huge indicator, and especially the box, right? A lot of times it's just like stacked bids get wiped out, then boom, it's gone. So the volume is a very big deal. So that is a good point. Let's see. So then you said in your DRCs you were trading leveraged ETFs. Why these instruments versus futures or options? How do you decide which instrument? Blah blah blah. So the easiest, simplest answer, is because at Trillium, they don't have futures. And at the time they didn't have options. So leveraged ETFs, right? You have a certain amount of buying power. And so leveraged ETFs are just the most effective use of your buying power. And so one thing that I think the average retail trader does need to think about is, right, most retail traders are buying power constrained, and there could be some opportunities where if you don't effectively use your buying power, you miss out on potentially huge money, especially on some of the market moving days, right? So instead of buying, like if you were to buy SPY or something and you were to max out your BP because something let's do the opposite. Let's say something super awful happened. The difference between shorting SPY and buying like a levered VIX is so massive, right? And so stuff like that at Trillium, you learn to hyper optimize buying power use, right? Because like, let's go back to 2018 during the Trump-China trade war. There would be so many people that would buy FXI when FXI is just single leverage Chinese names, but then you have yin and yang, which are 3x. So you could deploy your buying power so much more effectively. And there would be times where like these headlines were the best opportunities in 2018. So there would be times that people were like, it's such a high probability trade. If Trump escalates the trade war, right, you want to be short FXI, but then if it's such a good trade and it's such high EV, if you're short FXI rather than using the 3x leverage ETF, you're making 1/3 of what you could otherwise make. And so for most retail accounts that are buying power constrained, that's so important to optimize. You do get these markets where sometimes it's very macro related, and you really need to be thinking about this stuff. Like think about even during the era of CPI, you want to be trading the stuff that's going to move the most and offer you the most asymmetry. There's also, you know, God forbid, let's say something awful happens globally. Like the difference between you, if you have options access and you can go into options, boom, that's wonderful. If you have futures access and you can go into futures, boom, that's wonderful. But God forbid something happens tomorrow. How many people have truly optimized the most effective way to trade that event? You know, again, getting away from the morals and ethics, right? Like if something bad's going to happen, are you going to be the trader that makes, you know, 50 grand? Or are you going to be the trader that makes 500 grand? Or are you going to be the trader that makes 500 grand or 50 million, right? Like these decisions are very important, and not just for the downside, but obviously the upside. But you know, most awful things in the world are kind of more stair step, you know, discrete than good things. So it's worth really thinking about that, and that's why I use the leverage ones. Does that make sense? Any questions on some of that stuff? Like it's really just what instrument is going to give me the best expected value and asymmetry, right? And like in stuff like SMCI, it might be a 0 DTE. One other thing I would add too is you also need to think about commissions as well. If I'm not mistaken, I mean, it probably depends the platform, but I would say for me on IBKR, like I do believe futures are infinitely cheap, not infinitely, but way cheaper than me trading normal equities. So generally, well, and you just get infinitely more leverage. So I will definitely trade like the NASDAQ futures or the S&P futures rather than trading SPY. And even with some of the Forex stuff, like I'm trading futures on the yen or the currency stuff rather than trading like in equity like currency ETF, just because it's cheaper and more leveraged if I ever need it. The funny part about currencies is you can just get totally absurd position sizes because of the leverage. Any questions from anyone based on that? Okay, cool. How does your trading change when you see bids being pulled or the spreads widening? I mean, I don't think anything crazy other than the fact you need to just factor that in as far as slippage. One thing I think people don't assess well is expected value based on spreads. Like there will be tickers like Nikola or MULN or Ford or I don't know, even like Apple compared to prices is pretty damn liquid. And there can be times where you can literally risk a couple pennies, and in the ability to risk just a few pennies because the spread's so tight, you can get really amazing asymmetry. And yeah, that stuff's important. Like especially on some of the scalps. Like if you can risk 1 penny and make 10, that's pretty amazing risk reward. So really the only way I think about the spread is just like the wider the spread is, generally the more expensive it's going to be for me to get in, the more expensive for me it's going to be to get out, and therefore my expected value, all things held equal, is going to be much less. What order type are you using to enter and exit your capitulation trades? So I never use a market order. Maybe not never, but in general, I'm always using limit orders. For a capitulation trade, if I'm trading front side, I definitely want bids in. So in trading GLL and stuff, I had bids in just in case it really, like, again, assuming I want some on the front side, you can get some really crazy wicks that happen. Like obviously the limit bands can prevent some of that stuff. But there will be times where you just get like that one little order flow thing where it's weak, boom, and it just flicks down. And if you don't have limit orders in ahead of it, you're never going to get the print, and vice versa. There's so many times trading, especially at Trillium, where if you had limit orders in kind of proactively, you would just get essentially virtually free money. By the time like you get filled in that quick flash, it's already reverted and you're in the money. So on the way down, I will definitely have Hail Mary YOLO bids in, and vice versa on the way up. Again, like it needs to be intelligently placed. Like I'm putting them where I really, really want stock. And sometimes the limit bands, depending on the time of day and the stock, can be really, really wide. And so sometimes if something's melting, a lot of times you get that flush down there, and like by the time people can react, it's gone. That being said, on the backside, generally you need to be a taker of liquidity. Once that thing turns, I'm no longer putting bids. I am taking. In fact, I would say the majority of my trading at Trillium was taking liquidity. If I had to guess, 95% of the time I'm taking, between breaking news, between all sorts of breakouts, between capitulations and waiting for the turn. Once it turns, I want everything there is. And I'm using limit orders, often limit orders through the liquidity, right? So if I'm buying, I'm doing a limit order through the ask. If I'm selling, I'm doing a limit order below the bid. Does that make sense to everyone? Any questions on some of that, or is that good?
I think that was pretty clear. I just have a quick question.
Yeah.
If you're trying to buy like through a limit up, for example, like on GL, you know, when it started to like halt up, I think it was like 42 or something like that. Are
Yep.
you going to use like a market order in that case to get priority, or are you still?
Now we've got a good question. So who can tell me what the priority rules are at limit ups and limit downs? Is anyone going to be brave?
Market on open.
No, when it's at the limit up or limit down. Before the halt, you're saying, right?
Yep, just before the halt.
So, and this stuff, part of my edge as a trader, like I would say at Trillium is far, like I consider this question under the realm of market structure. Like what are the rules of the game based on just kind of the structure of the stock market? And market structure would really, really come into play at limit up, limit downs. It would really, really come into play at resumptions of halts. It would really, really come into play on imbalances. And I really like to think that at Trillium, and even compared to people at SMB, I like to think I probably had some of the best market structure knowledge there was. And there would be so many times where like having that knowledge would make me money, and other people would miss the trade because of it. And how did I get that knowledge? So what you can do for all those questions, like imbalances and everything else, you can Google and research the literature for these things. And I don't remember anymore like what it's titled under, but it would be like NYSE closing auction literature or something, or like NASDAQ. And you can find like, what are the rules for NASDAQ? What are the rules for Amex? What are the rules for NYSE at the open, at the close? What are the rules for these limit up, limit downs? What are the rules for halt resumptions? And so to answer your question though, when you're at a limit up, market is not going to work because you can't take any offers. It's at that band. So the other mistake people do is you need to be visible. Not only do you need to be visible, but you do not want to be refreshing, because anytime you refresh, you're going to go to the back of the queue. So many people, like sometimes some of the liquidity at these upper and lower bands are the best liquidity. Like the expected value on those prints are so insanely important and good. And so knowing those rules, I know that I need to be visible. I know that I don't want to be refreshing. And even more importantly, it's a question of like, you can even go this granular, which I did. What venues tend to get the most liquidity at these limit up, limit downs? And a corollary of that, in short sale restriction mode, what venues get the best liquidity, kind of pegging on the offer? These are all really important questions. So how do you find that out? I mean, at least for me, what I did was I collected data. So how many people out there do you think have taken 300, 400, 500 data points of different order combinations and found out in the aggregate which order combinations are superior to other order combinations for getting this liquidity? Like, I've never heard of someone else doing that. But that's the type of work I did. And that's the type of work where it's like, if I know this venue gets liquidity, like 8 times as much as this other venue on average, like that's a huge advantage. And I'm going to get some of the juiciest prints out there as a result. So that's the type of work I would do. I would literally test this stuff for like months and compile all these crazy data points, but that's where edge comes from. And I don't think most people ask these questions, then most people don't do the work or run the data. Because that's like super granular, but that's literally where edge comes from. When imbalances are happening, I understand like during witching and different rebalances, I would understand the market structure of what's going on behind the scenes so much better. Not the best. Like there's some people like at Kirshner or at S&P that are exceptionally great at imbalances, but like I would say at Trillium, at least I understood it better than probably anyone else. And that's like that translates to real edge. Like it's an informational advantage about the market structure. And then you have a data advantage to back that up. So I know like this is how I get the prints. 2, this is, the order types that get them the most versus anything else. So that stuff really is important. And I think it's just like a good microcosm for what separates an elite trader from the rest. It's like, it's asking those questions and running down those answers and putting the work in. Because that adds up. Was that good for that, Phil? Yeah.
Yeah, no, that was perfect.
Yep. So, and this is a good question. I mean, Drew, by the way, like, thank you for all these questions. These were really good overall. Your DRCs show your big trades of the day. Are you scalping during the day as well? If so, are they the same tickers or others? 100%. I am doing, so, I mean, especially in 2020 and 2021, I was doing probably 5 to 10 million shares a day, like ludicrous amounts of volume. On a normal year, I was probably doing, I don't know, million to 2 million shares a day. And so I was doing so many some days are slow. So on some slow days, I might be doing 5 to 10 trades, but like on an active day, I'm doing a zillion different scalps and stuff. And those I'm generally not writing up just because it's a lot of small things. And it's like, you can't write up 20 things a day. But generally there's they're the same tickers. Some are different. Anything that's kind of just like, a lot of it would be plays on the box, like in IPOs. I would do you can do a lot of nice scalping on in-play IPOs. And I would say a lot of scalping is really understanding how to read the tape and the box and being prepared for some of the like liquidity pockets around certain bids or offers. So yes, 100%. Like most stuff in my deal, like most days, I'm sure I was probably trading like, 8 to 15 tickers, but I'm probably only writing up 3. And it's probably a lot of the time, like a couple grand just adding up, each day, majority of days. But no, it wasn't being written up. What do you do to stay calm, either when in a trade or when market volatility picks up? For example, breathing exercises. So it's never easy. Like I think especially on a desk, like you can almost feel some like the nervousness or the tension, like going into like a quad witching, like your palms would start to sweat and stuff. Or like if it was like a really volatile day going into the open, like, you could just feel it in the air, like how some of the tension and everything would be. And I think a lot of it just comes from confidence in preparation and just experience. Like I remember, especially in 2020 and 2021, on some of the big days, like I would just tell myself, like, Lance, like you've been training the last 10 years for this moment. Like there's nobody that's put in more time and more work than you. And if I could have anybody's expected value in the whole firm on days like that, it would be mine. If you asked anybody in the firm whose expected value would you want on the big days, every single person would have answered Lance's, because I had the biggest, asymmetry in skew. And so like, I think with experience and confidence, you start to just internalize some of that. Like I won't act like there's never nerves or anything like that. Like you're always going to feel it. Like as silly as it is, like we're still just so tied to like the emotions behind that green or red number. But I think the short answer would just be like, you trust in your process, you trust in your experience. And you try not to get caught up in too much of any moment and just be like, look, I've done the work. Now it's time to execute. And whatever happens, I'll learn from it. Cause you don't want to start building up these moments. Like I think I would see a lot of people get in their own head where they're like, oh my God, like today's going to be such a big deal. Like it could be so much money out there. And like, once you start building it up, it's like you're getting too far on like the anxiety, like side, you want to be like, I think peak performance, you're not perfectly meditative calm. Like I don't think that's right either, but you're not super anxious, nervous. Oh my God, I can't sit still. You're really just like a focused energy in the middle. And I think that's kind of where a lot of it, where the best performance kind of lies. And I guess for what it's worth, I do think breathing's important in the sense that like you do just want to, your body knows when you're panicking, right? Like you don't want to be hyperventilating and everything else. You just want to be breathing normal. I want to be acting normal. I do think if you do sometimes get really nervous, it's probably good to just kind of like take a little walk or just jump around and get some of the energy out. I don't know. Could be like a better question for cats one day or something. So then GME. So, okay, GME was something I wanted to talk about. Any questions on that before I jump to GME? Because I think this is something I wanted to talk about a fair amount.
Yeah, just a quick one. Were you watching or looking at your PNL intraday, or like, do you find any benefit to look at your PNL?
Yeah, 100%. Yeah, I'm always looking at my PNL. Like I think like the people that delete their PNL or take it off the screen, like it seems kind of asinine to me. Right? Like if PNL is information, I need to know is like, what's my PNL doing? I don't know. The other thing too is there would be times I would have a huge amount of positions, right? Like if I have 5 or 10 positions open, like, I mean, it's not an exaggeration to say that on big days, I might have 15 large positions. And like I need to use that P&L as an indicator, right? If I'm looking at this really, really big position and this position's going in my favor and my P&L is staying flat, something's really wrong and I need to find out where. So it's like, it seems kind of crazy to me to not look at P&L because it's information. The other thing too, that is like, the same way a trade can have that, what I call that reference where you go from positive to negative around the unaffected price. I would say another huge reason to have P&L is, guess what? If I had a green trade off the open and I'm plus $5,000 and then I'm going to +4, +3, +2, +1, then I go to 0. That 0 needs to be like a, hey, whoa, like what the hell? Like I was up $5,000 this morning. Why am I going neg? And that's where I think it's a good indicator also to just take like a little pause and say like, hey, what's happening here? Like, I made a nice trade off the open. Nothing else was as good. I need to do a check-in. So like I would always do a check-in anytime I would go green to red. I mean, obviously assuming it's significant, right? If I'm up $100, like, and then I go to -3,000, like the $100 was bullshit for me. Like that's not significant. So that's another reason why it's important. Then also, a lot of segments I would do my give back rule. So let's say I'm up 20,000 off the open. I might say I only want to give back up to 10 of this. It's kind of slower, like there's not much going on. So okay, I only want to give back to 10. So I need my P&L to know that. Like, yeah, I don't know. I think you get a lot of benefit from that information. And I think like the people that are so emotional around P&L, like you need to eventually just like, I would argue the people that can't have their P&L on the screen, the more important thing for them to do is build the skill set that you're not emotionally tied to it. And just be using it as information. But like, it would be saying like, oh, I don't want to know my temperature each day because that's going to throw off how I think I feel. Well, it's like, I mean, yeah, in theory, that's true, but like your temperature is actually a decent indicator of, hey, am I getting sick? Right? Like if my temperature is 100, I kind of want to know that. So therefore it's like, okay, I'm going to skip the gym today. I'm going to trade a little bit more reserved. Like it doesn't help me to say, oh, I'm just going to ignore this piece of information so I don't react to it. It's like, no, like that in itself is information. So yeah, I always have my P&L on my screen. The other thing too, and I don't know if people can custom code this, but I would have different indicators of the color. So just like the background. So if, maybe at like negative 10K, it would be like one background color, negative 25, it's another, negative 50, just as a form of like a visual check where it's like, whoa, what's going on? I kind of hit the first safeguard. Whoa, I hit the second. So anything to kind of just like pattern interrupt your mind and be like, whoa, like, hey, what's up? Something's wrong. I think that's kind of important. So GME. So let's touch GME, and this is also going to touch on the question. Let me see if I can find it. Okay, let me first jump to Jeff's question, because it kind of touches on this last one from Drew. Now that you're doing more day-to-day stuff away from trading, do you have some kind of morning filter that instructs you to spend a little more time trading today? Or do you rely on your pod to give you a heads up, something is lining up well, or are you still figuring this out? I know it's not easy, if only like for that easy to know which 2 to 3 days to trade a month for the big ops. So yeah, I think the right answer is it's never easy. So the first thing I'll say is me not trading full time. There's a basket of trades that I recognize are just like, it's just no longer going to be in my playbook. Like my ability to trade breaking news like I used to is a total zero now, right? Like not only am I not sitting by a computer for the overwhelming majority of a day, but like I don't have my hotkeys, I don't have my news sources. Like I'm trading totally blind. And again, like half my day is on calls and I'm on my phone in some form. So like breaking news was a category where it's like, okay, like I must accept that this is just largely kind of done for me. Even like imbalance trading, like, I don't know, I assume there's probably some way to do it on Interactive Brokers, but like, I don't know if I can access the whole imbalance feeds and the same orders I used to use through Interactive Brokers. So yeah, I don't know. So like imbalances was another category where it's like, okay, this whole thing is just going to be like totally gone for me and I need to accept that. So what does that really leave? Like, I think that leaves a lot, like the lowest hanging fruit, of course, is stuff that's making moves on the daily, stuff that's capitulating on the daily, different breakouts or breakdowns on the daily, and just a lot of like just technical analysis patterns, especially the capitulations, because the capitulations tend to be more reactive. So what do I do to see some of that stuff? So it was kind of like a mix at what Jeff was hinting at. So first of all, I do have some chart filters. So I do have some chart filters and scanners, kind of like the oh god, the stock fetcher stuff. The other thing is I do have like he alluded to, I'm in so many trader group chats just on text message where it's like, if anything big is happening, I kind of generally tend to see it thanks to some of the guys in SMB or wherever. The other thing too is like, I'm always following kind of Bloomberg news. I kind of have the alerts on my phone. I also kind of always have my own watch lists. So it's one of those things where it's like, if stuff's in my playbook, like if something's really moving and capitulating, like stuff like GL, people are going to give me the heads up on that. Otherwise, like, I don't know that I don't think I ever traded the ticker GL or had heard of it. So stuff like that, people are super useful. And that's the power of a pod, right? So it's a mix of all the above. And then the way harder part is just me accepting that I'm going to miss a lot of stuff that I used to do well in, which is kind of a different conversation for a different day. Like I think the way harder part is just psychologically accepting like, hey, I used to be really good at this stuff. I'm going to leave money on the table. And like, this was someone where I was so hyper, like, oh my God, must pick up every dollar, must make every single play, must not miss everything. So to go from that mindset for a long time to just be like, hey, I need to just be like totally zen that like over the course of the year, there's going to be like, I'm going to miss a lot. And the thing that has helped out with that, I would say is like, by me just trading my own account on the really big stuff, like I'm able to go so much bigger on that stuff where like at the end of the day, like I kind of suspect I'm still making more money than I probably would if I was trading like my old style, my old account, just because I'm able to go just so much bigger on stuff. So I don't know. But so that led to the GME question of when and how did you see this and how did you trade it? Okay. Okay. So GME has been on my watch list, I don't know, for a while, just because I like seeing it die, because I think the whole up move was just like kind of stupid. Like, not in the sense of like I'm gonna fade it stupid, but just like, I don't know, the whole Wall Street, it's just like idiots that made money for the wrong reason, in my opinion. So I mean, I don't know. It was on my watch list. So I think I saw that like this day, oh, like, you know, it was up 10% plus or whatever. But the other nice thing about Twitter, not that I even follow a ton of people, but I think I really started cluing into the stock because a lot of people on Twitter were talking about it. I don't remember what tweet I might have seen, but like it was one of those things where I saw it on my watch list, which, you know, really isn't that big. So that's kind of luck. But then I saw it on Twitter. And then I think once if it was really doing something crazy, somebody would have shot me a text. So ideally you have a couple layers of protection. But like once I saw it on Twitter, I was like, oh, wait, this had been kind of perky the prior day. Like, I wonder what this is doing. Then I started to really pay attention. Now let's jump to 5-3. So a couple of things, by the way, just real quick. I always want to look at the daily first. Obviously, we know, like, if I were to go really long picture, big picture, long term, this is coming from a really high base. It's kind of been getting killed. That being said, this is multi-billion-dollar market cap and everything. I believe it still is. Yeah, it's got to be. So to go from 10 to kind of almost, you know, close to 100% in 2 days, that's not nothing either. So that's the daily context. So now we're looking at 5-3. Especially this year, I've been kind of lucky to not miss more things. Like, I feel like the last couple of years I've missed stuff just because, you know, it's just inevitable. Some stuff will get by you, but I feel like this year I've oddly kind of been on top of things somehow. Okay, so I think I saw it, like somebody was tweeting it about like around 15ish, and that's where I'm like, okay, I'll keep an eye. So the question was, how did I see it and how did I trade it? Okay, so this was, I didn't do anything all through this, and like, I mean, maybe potentially if I was paying attention, like if anything, this is potentially like a long here, and especially I think this fell on a Friday, if I'm not mistaken. What, this was 5-3? Was that a Friday? Yeah, it was a Friday. So the way the market has been this year, with so many things moving on Fridays, like I don't think it's that crazy to kind of YOLO into some calls like back here. Like here it's rational when we're breaking out and you can see, okay, you know, maybe this really catches steam. This is the type of stock. This is the type of move that is reflective, meaning like the more it goes, the more people believe it could go even further. Like I would argue that Bitcoin is reflective. The more people that believe and buy into Bitcoin, like the more powerful it becomes and the more accepted it is as the currency, right? If everybody believed in Bitcoin, nobody would be buying gold, price would go up, would reinforce. And so like some stuff like GameStop kind of like reinforce that, where it's like, oh my God, the higher and further this goes, the more people that kind of want to pile in. It's kind of like a little wacky. And so like at 13, whatever this was, 75-ish, I don't think it's that crazy to YOLO into some calls. Not that I've pulled up any pricing. So again, I did not trade this long here. I don't think I was even watching it here, if memory serves correct. But that's totally acceptable. And I do think calls are kind of cool in this just because the asymmetry. And you can just risk a set premium in case this isn't so clean. So then even here, I don't hate buying here. I don't love it either just because of how this was. But given the tension in the stock, like of all the stocks that can end up getting kind of wacky, like even though I don't love this intraday chart because of this right here, I don't think it's that crazy to buy this one either. The other thing too is like this is a super liquid stock. Like this was doing what, 400,000 per bar. I don't think it's that crazy to even buy like, you know, 10,000 and catch that little leg there. At this point, like buying this one, even though this worked, this is like a little bit more of a chase. Like I feel that the best one was back at that 1375. This I think is totally acceptable. This to me is just too little consolidation. And even though it worked, I don't necessarily love it. So as far as what I did, when this went from 16 to 1750, the volume was getting super massive, right? So this was like 1 million here. And this was now, if I'm not mistaken, this was kind of, yeah, this is right. So this was one leg. So the way I look at this is we did one leg, we consolidated, we do a second leg. We barely consolidate, now we do a third. Not only do we do a third leg, but like this first leg was essentially like, I don't know, it went like $1.25 or so, maybe like $1.50. So then this next leg from 1375 went to 1525. So we went essentially almost like and I'm kind of rounding here, but we essentially went like a symmetric $1.50 on that breakout. And this was a good amount of consolidation. So I think it's totally reasonable for us to do a symmetric leg, right? Like one leg, nice consolidation all afternoon. It's totally kind of default base case that we then break out and do a symmetric leg. Perfect. Okay, whatever. We then have a super, super small consolidation. And then we kind of break out. And then this is just the biggest leg, right? We go over $2 and we get some nice price. Not that the price capitulation was so insane, like this move isn't that crazy, but now on the daily, it's pretty darn big and we get the volume. I don't necessarily want to fade that, but the other thing was on the options, the implied volatility, like the prices on these things were just super, super ludicrous. Like, I mean, even I don't remember what some of the prices were, and it's going to be kind of hard for me to pull up historical ones on this. I don't remember what the exact prices were, but some went really, really high. And so once this turned, I shorted a bunch of the ones expiring this day and then next week. So why did I sell calls rather than shorting stock? Okay, well, here's actually one thing that's important. So Interactive Brokers didn't have any borrow on GME. So a lot of people, when I posted this on Twitter, were surprised. Like, one of the best parts of options is you can short stuff that doesn't have borrow if there's options, right? So like so many people were like, oh, I wanted to short, but there wasn't any stock available. But it's like, bro, that's literally like you can literally do the exact same trade in options. So I was super shocked that, like, you know, if you're a professional, like you gotta kind of know, be aware of some of that stuff, because that opens up a whole nother world to you. And like some people are like, oh my God, selling options are dangerous. Like that's the other funny part is like selling a call is like the same danger as shorting the stock. Like both can, like shorting, it can also go to infinity, right? And the same way, if I'm shorting stock, I have a stop, I can have a stop on the calls as well. So it's kind of like, I think like, yes, you need to respect selling calls. Yes, you need to do it intelligently, but that's the same for like shorting a stock or buying a stock too. But yes, like you definitely, like there's stuff that has no locate all the time that you can use options to capture that. And not only that, but sometimes like in stuff like this, the IV is just so super high where even if I was able to short the stock, I don't think this move is so crazy that the options were so jacked up and this move isn't that crazy where like I prefer to sell the calls anyways. And so someone also asked me like, Lance, why didn't you buy puts? The issue with buying puts is like the puts were stupid expensive as well because the IV is so jacked up. So it's like when you sell the calls that are so far away, that just gives you like just so much cushion on the trade. So then the other thing that I pointed out, like, so I wish I remembered the prices, but like, so the $20 calls during this move were trading like super expensive. But then the other crazy thing that happened was like right into the close, I think it was like 1552 or something, 1553. You've got like 7 minutes left and a lot of the calls were still printing at stupid prices. Like some of the $20 calls ended up reprinting at like 18, 19, 20 cents. So it's like, keep in mind, these options can generally be exercised until 4:30 p.m. So just because the market closes doesn't mean you're safe. If this mega ran after hours, you can still get exercise. And the other risk is you can't close that option after hours. So if I'm short all these $20 calls and this rips after hours, I would probably need to potentially, buy stock to hedge the short or whatever, if I so choose to. But the point being is like, like $20 is really, really far away from 1650. And so for somebody to pay 20 cents for that, it's just like, it's kind of just an erroneous price. Like here's what other replies missed on some of that stuff is so many people are like, oh, there's a rational reason for whatever. Like, oh, you can do it as a hedge, or you can do it as, let's say you're short stock or you're long or this or that. Like, there's like they're conflating 2 points. There's totally rational reasons why you might want to buy a $20 call. There's totally rational reasons why you might want to do it. It's not about buying the call. It's about buying the call for the price people were paying. It would be like saying, oh, let's say I bought a Honda Accord for $400,000. And I'd be like, yeah, but I need a way to get to work. I need a mode of transportation. And it's like, yeah, like that's true. Like there is a rational reason why I might buy a Honda Accord. There's not a rational reason why I might buy a Honda Accord for 400,000 because I'm way, way, way overpaying for it by like many multiples, rather than just like going to a dealership or whatever the case is. And like doing that in the aggregate, like in the aggregate, me buying a $400,000 Honda Accord is not going to be profitable for me. Like it's not a rational thing that's going to, like, you're taking on negative expected value. The second I buy that car, I'm $370,000. Well, I don't know how much an Accord is anymore, but I'm like a huge amount of money in the hole. And so like there's reasons to buy a $20 call. There's not reasons to buy a $20 zero DTE call like at 20 cents, And so but why do I think that and feel so strongly is like, if you even look at the options chart, like it was down to like 10 cents. Then for whatever reason, it quickly, like somebody was just buying it and it shoots up to 20 cents again, even though the stock is going down, right? The stock is going down, price was shooting up. And then like, if I'm not mistaken, like the stuff that the call that went for 20 cents by the close, like just a few minutes later, it was trading for 3 cents, right? So like, I would argue the actual price of it should have been 3 cents or whatever. And that's kind of where it was traded. But like someone a few minutes prior, like the stock only went down since then, So that's why I thought it was so crazy. And so I didn't short any stock because there was no locate and I would have wanted to anyways. I didn't buy puts because the IV was so expensive. What I did was I just sold calls, the zero DTEs and the weekly ones.
Sorry, Lance, on the weeklies, what did you cover? And did you look at like when the IV drops back down, that's when you would cover? Or?
Yep. So let's see. Let me read some of your other stuff. So my zero DTEs obviously expired worthless. Like I think I had like some 18s. I had a bunch of 20s. And so the other thing I would say too, by the way, guys, and like this is part of my general rule for selling options. I'm only selling options where I generally only want the stock. And for the size that I would want within that time frame. So it's like if we hop back to this daily, which you all need anyways, like on a 2-day move that this started at like $11, considering this spent the whole day trading in this range, like I would so happy be short $20. And so then what's even crazier, the weeklies, like for the ones that expired on Friday, meaning like this past Friday, so 1 week later. So like I was shorting some of those $30 ones for like, I don't know, I don't remember off my head, or maybe I think the $30 ones went like for like over $1, I think, unless I'm mistaken, or maybe it was the $25 ones. But my whole feel was like anything like 25 to $30, like I'm happily shorting that all day. Like one, if it spikes there, I want to be short. But even if I end up, and this isn't for the average day trader, but like if I end up short GME, like big picture, like I don't mind holding this thing. And again, like GME can mega squeeze. Like I don't want to discount that. I'm not shorting any massive position where if that doubled or even tripled, like I still would have been totally fine and even probably just been shorting more. So like if I were to go, let me do, man, I don't have my normal defaults because of this. But so if this in just 1 week went from like 10 to 30, I'm pretty happy to short that. Not that it can't go further. Like I would need to really assess depending on the price action each day. Like keep in mind, just because I sell an option for like a week or 2 weeks out or something, that doesn't mean you need to hold it the whole time. In fact, some of the options that I held or that I sold for the next week, I didn't end up holding the same week. So that was a follow-up question. So when did I close some of this stuff? Okay. So in general, this stuff can be super rangy. So, right, when this opens, this opened, what, 15 bucks. I think it went down first, then it ran later. But when this stuff opened at 15 and dropped to 14, like the IV and the time factor when you've now wasted a whole weekend and the stock is lower, like for this to get to 25, 30, or even 20, like you need to make some real progress. And so when this thing is back at 14, those calls just get absolutely crushed. And so like somebody, oh yeah, it was this day. So 5-6, somebody asked me some question and I'm like, dude, like the calls are down like 80% plus. Let me pop this up. Oh, so, okay, this did rip. Oh, that's right. That's right. I was wrong. This did rip off the open. Okay. Yeah. Okay, I recall this now. So this is worth discussing. So this stock goes up off the open. We had kind of like the lower open. This is a really tight kind of consolidation. Like this is almost what was kind of forming on the daily. I think buying this break is pretty interesting. Number one. Yes, you might get stopped out here. So the other thing I want to touch on is this high came super, super close into the prior day high. And so I don't want to fight this strength. Like this isn't so euphoric or capitulatory that I necessarily want to short this. But once this does turn, like I don't mind shorting this break here and giving it to the prior day highs. And so you can really nicely structure a swing trade like that. You can nicely structure this as an intraday trade. Like it's totally fine to short this here on that break of prior bar highs and cover it like there. Like that's an awesome trade. One thing I did is like, I think I just ended up using this pop into those prior day highs to just sell more calls. Like, cause all my Friday exposure, my 0 DTEs expired over the weekend and I had sold a lot of those. So my exposure coming in on this Monday was way, way lower than it was on the Friday. And I generally want exposure like short vol on this. So when this redid this move, then did that turn, I shorted more of my calls, of the weeklies this time. And so then when this goes like this, it is totally like those calls have just imploded, right? Just because they're weeklies, they don't have that much time. And so that was something where it's like the calls were down, I think like 80%. In general, you don't want to get super greedy with options because like especially in stuff like GME, like weird things can happen where like if some news headline does come out during the week, like there's a lot of asymmetry against you when you're short those calls. So in general, when this got just mega nuked, like I did take off a lot of exposure. So now let me just talk on the daily for one more time. Any questions so far on any of that? Okay. So at least in my mind, what ends up happening is we form this little wedge, right? Where like it's just inside bar, inside bar, inside bar. And so this came up with oh God, David Hanlon, I think it was. So really big picture for me, like for me to want to be short this, I want a break of daily trend. So I want us to break prior bar lows, which never happened. For me to be long this, I want the break above, really, I might as well just wait. What is this high? I probably want to just wait for the 1750-ish break. This is a little bit too cute when we're so close to 1750. So I really just want that range to break to initiate this as a long. And so I'll end up doing a separate video for David Hanlon, but his question was on 5-9. So here's the thing, like a lot of people will conflate their intraday trading with like daily swing trading. And so there's two ways for me to play this. Like if I'm going to trade this day intraday, I need an intraday setup. If I'm going to trade this as far as a daily swing, I need this to break out on the daily. Or, right, there's kind of two places I'm willing to go long. I'm willing to go long pretty tight against these lows just because my stop is, depending what the intraday looks like, my stop isn't tight against those lows. I don't like where he was messing up was he, I think, was buying, and I have to jump to the intraday, and I can't speak to exactly what he was doing because I just don't know. His explanation, he did explain somewhere, but it wasn't like super detailed. But I don't want to buy 1680 or 1670 or 1710, right? It's too high on the range of this wedge. Like if I could like clip art, draw this flag wedge thingy here, I don't want to buy up here, right? Like we're getting close to this resistance. I want to be shorting against resistance. I want to be buying against support. So from a daily perspective, I want to be buying down here or I want to buy on the break. That's just basic technical analysis. So I would argue like what he was doing was he was buying in no man's land and buying too close to the support. So like these are basic technical analysis concepts, but like it's so important to like actually think about why they work and then how to apply them. And that's when I make my video, which I'll just post online. That's what I believe he was doing wrong. And like, if I'm going to trade this intraday, I need a really good intraday setup. So now let me jump to 5-9.
Hey Lance, just a quick question about what you just said.
Yeah.
When you're buying into support, do you think that the EV is kind of worse because you're buying into weakness, like inherently?
No, not necessarily. I mean, it depends what the intraday looks like. It depends what the chart looks like. And so this is where you need to be careful. It's like, and this is where someone conflated it too. Like I would argue that your win rate is probably not super fantastic. Like I wouldn't say your win rate buying down here is super fantastic. Like I think it's pretty improbable that this breaks out when you're buying down here. But the risk reward is so insanely skewed. Like let's say, what was this low? This low was 1533. So this low the other day was 1535. So let's say in theory, you just go for this YOLO and you say, I'm going to buy 1540. Like in theory, you're risking 7, 8, 9 cents. But like, I mean, this ended up going like, $4 in your favor to some degree. So that's like, I don't know, you could argue that's like a 60x to some degree. Or you could have done it, say you bought 1537, you could argue I'm risking pennies and it could be like an 80x. But the question is then what's the probability that actually happens versus, it's like, oh my God, it just breaks by a few pennies and you're stopped out. Because we're talking about like such an extreme, like it's really hard to gauge when it's right here, like what the actual success rate is. So like me personally, like I don't do a lot of buying into this just because like I don't know, from like I just don't feel I'm so confident. Like it's hard to handicap what that actual percent is just because it's so small. But like it's small just because the risk reward skew is so insanely big. So I would say that I personally I don't do a ton of that. Really what I'm waiting to happen is to just exit no man's land. Like I really want us to just break 1750 and then I'll do that. Yeah.
That makes sense. Thank you.
Yep. So then So then if we look at this intraday, so on an intraday basis, the highs were like 1660-ish or so. But again, we're kind of in no man's land on the daily. So like a lot of this stuff, like I think what David was doing, it's not really clear to me. I think he was maybe like getting long here and risking to these lows. But like for me, like even though this makes sense on the intraday, like I would argue that what happened doesn't surprise me. Like his win rate was not sufficient, but I think the bigger mistake he made was like he was just betting too big on what I would consider like not that probable of a trade. So then by the, he took his wounds and was licking his wounds and all that. So that by the time that like what you never, ever, ever want to do is lose so much in no man's land that then you miss the actual trade when it breaks no man's land. And so like I can't speak to exactly what he was doing because I just don't know. And like it's hard for me to have any strong view, but my guess is like even if what he was doing was fine, you don't want to risk so much that you're then out of the game for when it actually breaks. Like that's the big mistake. But so even breaking the intraday highs around like 1660-ish, like I still don't want to buy there just because I want to wait just for the daily break. It's just too high on the daily chart against that resistance. I don't think it's like awful, but it's just not. In no way will that ever end up like some big trade for me. Like I wouldn't fault someone for buying some, but it's not amazing to me. So then when we do end up going, like I would argue on the intraday chart, when we break 1750 or whatever, this isn't like so awesome of a setup to me. So many people are like, oh my God, we broke the wedge somewhere in here and then we stuffed. And it's like, yeah, but like intraday wise, I wouldn't have bought that making an intraday trade just because this wasn't so good of a setup. We're kind of going, we're popping, we're going, we're popping. Like we did. What I really would have wanted to see is, oops. Oh God. Man, I mean, none of this is good, right? Like, look how loose this consolidation is. What I really would have wanted is all of this to have been a super tight consolidation against 1750. So if all of this, like, if you guys remember the VVOS intraday, that's what I would have wanted to see. I would have wanted to see a strong move up to 1750-ish, consolidate all day, super, super tight, then boom. That's the type of thing where it's like, oh my God, this thing's gonna rip. But like this was super loose in here. It's rolling over here. Then we curl up. But then I just don't like, I don't like 1750 is all the way up here when the real breakout's kind of down there, but it's still in no man's land. So the gist of this is like, it just didn't, like from an intraday perspective, this just didn't set up that well for me. So if I had to do anything, I would have bought 1750 as a swing and given it to the lows of this bar. And not particularly big size, just because I don't love how this set up. And so I think like you can also just fall in love with the setup, but then it just doesn't do the nuances in a good way. So this for me wasn't I was watching it without a doubt, but like it just didn't set up well. It's like you can have ace king in your hand, but then if it flops 7-9-6, like guess what? Like if it's 7-9-6 suited and you don't have either of those suits, you can have ace king and you can be super hopeful and optimistic, but then boom, your hand sucks and you got to accept it and you want to just size down or fold. And so like the way this unfolded is like it just isn't interesting to me. Yeah. Then I mean this did end up popping some the next day. What day was this? Is this worth even looking at? I mean, the only thing I was doing at this point was honestly on this day, I just was selling more calls just because I wasn't, just the volatility was so expensive. Yeah, a lot of the vol was just insanely expensive where you just get so much cushion. So even for like this, I don't feel compelled to be long or short this anywhere. Like, yes, this ended up pulling back a ton. But intraday wise, like there's nothing I love here. No volume capitulation, no price capitulation. So this was kind of like whatever for me. Any questions on any of that? Okay, going once, going twice. So here's an important question. Jacques asked me, Lance, you often mention not trading within the range and that the first quickest entries are the best. It is true that the best trades do go in your favor and the best trades never look back. Those are videos I'm going to do as part of the course because those are really important heuristics. Again, the best trades, go in your favor immediately. The best trades do not look back. So if the more times something pulls back and retests the level, that's not strength, right? The strongest stock in the world, boom, it's gone. It's $5 higher. If you're testing, it's not that I won't necessarily ever make a play, but that's not strength. That's not the best of the scenario. So does this mean that you do not retrade tests of levels? Also, would you trade a bouncy ball setup in the middle of the range or only at high of day? So I said, my response that I'll expand upon is I never say never. Like there's certainly times where something can break a level, it can retest, and we form super nice support. And then you can risk pennies and get a nice move, especially in IPOs. There's times where we'll break a level, then really pull back nicely to support and test that. And that support just really holds and we're gone. So yes, there's definitely times when I do it, but it's important to just, in both these scenarios, the retesting of levels and the bouncy ball setup in the middle of the range, it's not that I'll never trade them. I just need to acknowledge that in general, they're suboptimal. So like, I really the setup needs to be really, really good to compensate for that. And in general, I'm probably sizing down on that. And it's also just that like the best ones are kind of the ones that are gone. The best bouncy ball setups are at the ends of the ranges. So it's not that I'll never trade it. It's just I'm cognizant of it's not the A+ nuts the best. But yeah, there are times where it can be justified. Okay, so then Ozzy asked DXYZ, CEF at massive premium. Okay. Oops. So yeah, obviously this kind of did it's like a IPO thingy, trades way above NAV. Like, so what's important is you don't want to necessarily fight this stuff front side. Like we've seen so many crazy things happen, like VFS, Elfin, all sorts of tickers. So I never want to be fighting this stuff or like if you want to make the argument, oh my God, NAV is $4. Like that was true when this thing was at 16, when this thing was at 23, when this thing was at 25, when it's at 35. Like that's how you blow up. Like look at MSTR versus Bitcoin. Like you never want to be like, the market can stay irrational longer than you can stay solvent. And if you're shorting this thing at $10 and it goes up 10x, like man, oh man, can you get really hurt? So I'm never really trying to overly rationalize things so much rather than just trade the chart. Like I'll definitely use some of the context. Like I do think like, oh wow, this thing's going to get crushed at some point. And so like this was a big volume day, but then we kind of get like crack pretty hard. So this I would say is kind of like a death candle-esque bar. But the hard part is like this bar is it's got such a big wick where it's like, I'm not going to short here and give it like, I'm not going to short here and give 50 points. I don't think that's, super prudent. So really there wasn't so much that I loved on this. There was one day where they announced like, oh, I guess in theory they can do some offering at some point and they're like, oh, PS, this is $4 NAV and all that. But for me, like the other thing with this is borrow is super expensive. So in theory, you could be like, oh, I'm just going to hold this super long term. But like one, you can get force covered if this does rip up. And two, the borrow is super high. So you can't hold it efficiently for a long time. So there really wasn't like, I didn't feel that like technically this setup so amazing for me to enter anywhere. So like, did this retrace back a fair amount of the way? Yes. Was this a high probability short that this would go down? Yes. But for me personally, it just never set up anywhere compelling. So yeah, for me, I don't think I really would have done too much in this. I know some people did well, but yeah, it's not my bag, especially when like it's I don't know, hard to get locate. You're paying a lot. This stuff can get weird quick. So this wasn't that interesting to me. Okay, let's see. One other question, DC. So he had asked me, you're using IB for some of your trading. Have you found a way to set up as efficiently as your prop setup? My short answer was no. In fact, the truth be told, a lot of the time when I'm trading off my IBKR, like a lot of the times I'm just on my phone, just because of the fact that, half the days I'm busy. So like my trading is so much different than it used to be. I'm not doing the super quick stuff. I just don't have the ability to always be at my desk. Well, I mean, I do have the ability, but I choose not to be. I don't want to be at my desk all day. So no, I've not found anything that's been equivalent to the hotkeys and all that. And what that means is I've just simply had to adapt my trading. Like, I guess the analogy I would give is like, LeBron being, I don't know, how old is he now? He's like what, late 30s or something? 38, I think, or I don't remember. But the analogy I would give is like LeBron can't play the same basketball game that he was playing when he was 24, 25, right? Like he needs to be so much more adaptive to just the reality of his life situation. He's older. I'm sure he gets winded easier. He wants a less physical game. He doesn't want to get beat up going to the hoop as much. So what does that mean? He's probably taking much more. I don't watch enough basketball to know whether this is true or not, but I'd assume he's taking like just a lot more jumpers, lot more efficient shooting, not trying to do everything on the court, using his teammates more. And I'd argue, like, I recognize that, look, I've got different sets of restrictions now, like what is still within my wheelhouse and what needs to not be. So Ozzy asked, stock selection in sector catalysts, Weed headline, how do you determine which ticker is, this is an important one. Weed headline on 430, how do you determine which ticker has the most EV and breaking news situations, MSOS, ACB, Tilray, CGC, which one to go for? Same for the crypto headlines. The best way to know which headline to go for is kind of twofold. Like one, you can have a fundamental understanding of the catalyst and the tickers. Like sometimes, especially if you're trading for a while, like you eventually just understand certain exposures or you have notes and stuff. And it might be like, oh my God, I know on this type of, and these are the best for this reason. Or you might just have collected a lot of data points. Like I think the way more practical matter than knowing a lot about or a little about everything is you've just got data points from your notes. And so I think the most important thing as far as the 4-30 headline, which was, so the headline was here, right? And this was that finally weed kind of was declassified or whatever. And so the best comparable is just to go back to past data points. And in this case with MSOS, you have a super direct comparable to August 30th. And so MSOS is the one that just kind of like ripped the fastest and the most initially. Then, so what's interesting though is ACB and CGC were pretty delayed. And so then you kind of like want to ask yourself why. And so I believe ACG and ACB have like a fair amount of Canadian exposure. So they're like less exposed than some of the other ones to this, meaning to the US benefit. And so what's interesting though is like, nevertheless, ACB and CGC made a really delayed run. Okay, right? ACB really went the next day, but the first day, oh wait, did I just get lost? Yeah, oh yeah, so it was back here even. So it made a really delayed move on some of this stuff. Then, yeah, because CGC. And this was the one where it started. Yep. So overall, this stuff was pretty delayed, then it finally rips. And a lot of that, to my understanding, is just because these are mostly Canadian exposure. And so as far as how to determine what to go ticker wise, that's why you want to go MSOS. Just because this is the basket and has, you know, like US cannabis. But there was another point I want to make. Oh yeah. And so nevertheless, though, because CGC and ACB kind of had the delayed move, like I don't think it's that crazy. Like you want to go MSOS first, but then I don't think it's that crazy as a YOLO to just buy a little bit of the CGC or ACB or go into just some of the calls. The nice part of the calls is you get asymmetry if it does go. You get asymmetry if it does go while being able to risk a set amount of premium and not churn. So as far as the crypto headlines, I'd argue the same thing with the crypto. You just build up data points. If you're an astute trader with experience, you have all these data points where you're like, okay, on this headline, on this last headline, coin moved more than Mara, and you know, Riot was the third worst one. So if we look back over like, you know, what happened going into January in the beginning of this year. Oh, wow. Yeah, back here. If we look going into January, I think Coin was probably the best mover and Mara was fairly delayed. Like Mara ended up really going, but this was delayed. Then I think Riot was the shittiest mover. And so what that means is on future headlines, like there's stuff that was even worse than Riot. Oh God, I don't know if I can remember in my head. But there were tangential crypto stocks that moved even shittier than Riot. And so it's like, I never want to go for those. Like if you're going for Riot rather than Amara, you're way off. Oh, then even factor in, you know, MSTR, obviously, this thing really ripped on some of these moves, right? So a lot of it is just collecting data points. But then ideally, not only do we want data points, but like I said, with the weed example, we want a fundamental understanding if possible. It's not necessary, but it's nice to kind of understand and that's the benefit of when news comes out, especially if you have a Bloomberg, like Bloomberg does a pretty good job of explaining what went on. And so that's where I'll try and read after the fact. Like I don't want to be analyst and use my logic during the trade. I just want to kind of follow my notes and listen to the chart. But then after the fact, it's always good to just develop understanding. Does that kind of make sense, Ozzy?
Yeah, that makes a lot of sense. Thank you.
Cool. Then one final question from the Patreon from Michael. What was your process when game planning and or grading a potential trade during the day? Did you go through all variables in your head or did you use a planner/grader spreadsheet like Austin Mitchum does? So Austin Mitchum, I'm actually really good friends with. Very awesome, experienced, good guy and great trader out of Sydney. And he tends to be fairly systematic and being systematic works for him. For me, as far as game planning, like it really depends like how important the situation was. Like with catalysts and game planning for stuff, I want to make sure my time is always being used appropriately. So it's like, if there's like a 1% chance this catalyst occurs or it occurs during market hours and is going to be good, I may not waste like 2 hours game planning it. If I know, oh my God, this is a really, really big deal, I need to be aware of this. Like you want a game plan for like the weed decision. You want a game plan for the crypto ETF decision. You want a game plan for the election potentially coming up. Well, not that the elections potentially come up. You potentially want a game plan for the election that 100% is occurring in November. And so it's really this trade-off. And like, so what was my process? I mean, a lot of that process is understanding the catalyst. Like, why is this important? One of the most important things is also just knowing when is this expected, and also where is this expected to be released. That is so important. I want to try to find the primary source where this will be released. I want to try to scrape that website. I want to try to be the most connected possible. So I don't want to get it from the Squawk Box. I want to be the first person in the world to see that headline. So that was part of it. I want to know what tickers will move the most. Again, a lot of that either comes from analyst research or reading the news stories, or most of all, using those data points like in that last question. And so then the other thing is I want to figure out what variables are important for me. Like the biggest money is generally made on some of the outlier instances, right? When nobody thinks the Fed is going to cut, then the Fed cuts and everyone's off sides. That's the move that's going to get, the most traction and the most people off sides. So I really try to think about like what's priced in, where is sentiment on the pendulum? Are we already bought up and overbought into this headline? Are we oversold into this headline? Because a lot of times you'll get like a sell the news or like a buy the news type thing where it's like, oh my God, we're so beaten down. The news comes out, not as big of a deal, and it's a clearing event. So you really want to think about all those things. And so whether I use the planner / spreadsheet or in my head, it really just depends how big of a catalyst it was. And just how much time I was willing to spend on it. The other nice part was running an office. Like a lot of the catalyst research and like preparation, I would just kind of outsource at a certain point. But yeah, and I think at the end of the day, it's also one thing too. And he asked this in the question. Target sizing and stuff. I think figuring out how much you want to risk under each scenario is super, super, super important. That's a very good practice. Like okay, if it's the base case expected situation, maybe that's a no trade. Maybe I want to risk $1,000. If people are caught totally off sides, maybe that's 10,000 of risk. In which tickers? How much size in each? So yeah, especially for bigger stuff, I'm going very granular like that. And again, like there's some traders where they're just purely catalyst traders. Like that's the only stuff they'll trade. If that's your main business, like you can afford to put way more time into it. If it's not, less. So there's no right answer, but I fell in between depending how big and everything else. Okay. That was a lot of talking. So that was all the Patreon questions. What other questions can I address meanwhile? Yep, hit me.
Yeah, so I just had a question from one of your old DRCs. It was from the October 19th, 2018 DRC. It was for the PLAG trade. Basically that was the one that halted a ton. You were long.
Mhm.
I don't know if you remember that one, but I was just wondering what your thoughts are on the risks associated with that trade, and if there's any way to avoid such risks. And you also rebought it the next day, which I thought was interesting. So if you could just maybe speak a little bit about your thought process on that.
What day was this again?
October 19th, 2018. It was in the DRC that you posted.
Yeah, I'm pulling it up.
Okay. And the ticker was a PLAG.
Yep.
I think it was the most recent batch, if I'm not mistaken.
Yep. And so then what was the question now that I know the situation?
Yeah, so it seems like to me there's a lot of risks with getting caught in a halt like this. So I was wondering if there's any ways to try to mitigate such risks. And
Well,
also,
mhm.
yeah, and also
Let me just-
what were your thoughts on rebuying the next day?
So I don't think I rebought the next. Oh wait, did I? Was that's in the next report card or something?
Okay, maybe I misunderstood the situation then. I thought
No, I think I just bought it just after like I bought it back when it turned up again or whatever.
Yeah, I think so.
So when something halts, like obviously your risk is infinitely harder to control. My general rules are like for the most part, I want to generally be with the direction of the halt. So if there's like some huge breaking news headline, and I think it's a really big deal, if I can be long into that halt on the upside because it's a big positive deal, like I'm not at all generally scared of that. Like maybe because you can't control your risk as tightly, like maybe you do want to sell a little bit, but I would say overall being in the direction of the halt is generally a good thing, because what does the halt really mean? It means that band was constraining was artificially constraining the stock from going where it wanted to go. So if this stock halted at like, I can't tell perfectly, but like 550-ish, really what that means is it wanted to go higher. So generally I like being on the side of that, especially if there's a catalyst, which in this case there was, and especially there's a super, super strong technical pattern with it. So like overall, I'm not that afraid of halt risk. And so even take something like GL when I was on the other side of it, that's just because it was so extended. And I felt like the real risk was like, oh my God, if this could easily just turn and be gone to the upside. So it's without a doubt, it makes it harder to control your risk. But I think a lot of that is just from experience, knowing where you want that exposure. And so what happened was the stock didn't really meaningfully open up. We kind of like went back down below the level. So I got out, but then the stock refirmed up and then like reset up. So I got back in and I kind of got just like, it looks like I kind of just got like wicked out barely before it made this mega move. And that's kind of just life. Like for every time, like there's sometimes we'll catch amazing trends and there's sometimes you're going to get wicked out. And like so many people will be like, get so upset, but it's just what happens. And in the aggregate, I think, you know, you trust your system because the data says it will be fine. But yeah, in summary, I always want to try to be with the halts on like breaking news and stuff. In general, I assume momentum will continue unless you're really extended in one direction or the other.
Okay, that makes sense. Thank you.
Yep. Anything else from anyone else? Is anyone coming? I think Aman, I think you're making the Chicago happy hour on Thursday and lunch, maybe?
Yeah, sorry. I will be there for lunch on what's it, Sushi-san in River North.
You said you will or won't?
I will be.
Wait, I'm sorry. Was that Will?
Will, yes.
Oh, awesome. Nice. Yeah, that'll be good to hang out again. Awesome. Yeah, what else? What other questions from me?
Any update on your magnum opus?
So yeah, still grinding away. I think my goal is to get this out by year end. I think it's possible I can get it out even by like, I don't know, hopefully November-ish. So I had some amazing meetings last week with web developers. And so we met with about like 6 or 7 groups. And because I kind of think the scale of this could be very successful, I think what we're going to end up doing is just going with the big guns where they're just like a super large agency that have like, rather most of the people that presented, they're either solo developers or like part of a small team of like 1 to 3 people. And if I think this is going to be huge and we need to get it right the first time and it's just going to be awesome, I'm generally siding with just go with the best and full send. And so that's kind of the plan. In June, I'm going to start some of the filming, but then I think probably July, August, September is going to be the overwhelming bulk of the filming during the summer. So right now, I think I'm mostly done with all the topics. Like that table of contents, since I originally posted it, I've probably narrowed it down to about 158 topics. And I would say I might at least first drafts, like it's going to take a lot of polishing, but I think I'm probably done with like 100, maybe like 110 out of 150 of the drafts, maybe even more than that. And maybe, I don't know how many, don't quote me on that. But so essentially once I get all those topic drafts done, I need to find, and Ozzy's actually helping me with this, but then I need to find all the different charts. I need to revise all this stuff. I need to polish all these things. Like it takes so many, the amount of work that goes into this is actually like pretty ludicrous. Because it's just so much knowledge you need to put out, but then put it out in a way that makes sense and organize it, find the right examples that do the right points, while also trying to design the logo, design the look and feel, figure out the marketing, figure out who the best web developer is. There's going to be all sorts of stuff, right? Like you need to make sure from a legal perspective that I'm not at risk to get sued because, you know, people do dumb things. So it's like a pretty big affair that takes, really like a crazy amount of time. When it's like, if I could work on this in just total vacuum, peace and quiet and put like 40 hours in, it wouldn't be a problem at all. But I obviously do other stuff, which you know, but I try not to stress over it. Like mostly I've been going Atomic Habits style, where I really just try to work on this at least a little bit every day and not get overwhelmed by just how big it is. And yeah, but I think I really do. The more I've worked on it and the more I've spoken to other people and the more I've seen some of the other products, like one of the things my assistant and I did, we went through like some of the best products out there, like some most recommended products. And now that I've gone through some of these, it's just like LOL, like some of this stuff, it's just like 6, 7, 8 videos that are like half an hour to an hour each. And just not that granular and not that good. So I really think it's just gonna be so infinitely better than anything out there. So yeah, just definitely chugging away. And, you know, I'm right, as you guys know, I'm still doing the Patreon stuff. I'm still doing the tweets. I'm still doing my SMB work. I'm still doing my nonprofit work. I'm still doing the zillion administrative things I need to do to keep, you know, the One Lansby enterprises afloat. So it's, you know, I'm doing my best and we're making really good progress. But you know, I'm not going to let a time. The other thing too is, even though I wanted to come out to the public about it with a deadline just to hold myself accountable so I don't procrastinate. That being said, like if it's not going to be like, if I'm 2-3 months late to make it like to really polish it, I am not going to release something that's shitty. So it's all getting done right, and it's all going to be done super epic. And you know, I think for those of you saw like the website screenshots, as like the little just draft, like there's nothing out there that is even had that much thought put into it and how to present all this stuff. And so yeah, I'm super excited for it.
Very
What else for you
nice.
guys? Yeah. Yep, hit me, Rajan.
Yeah, I got another question about a specific ticker. So SOUN, on 2 specific days, so February 27th and March 14th. It was a recent runner. And I was just wondering how you might approach a trade on either of those days. Me personally, I didn't see any great intraday spots, but I was wondering your thoughts.
Yeah, I think this day I actually have written this up. I think this SOUN was in the March top ops where I discussed this, but I'll also jump to it. Then this 27th, I remember this not really being so interesting. So on the daily, this is kind of the first breakout day. Then we gap a fair amount. So let me go to 227. Or sorry, I think the intraday wasn't so appealing to me. Oh, I wonder if this is my issue because of because I'm in the paper. I might not be able to. Let's see if I can get the other day. 314. I suspect I'm going to have issues with this as well. Yeah. So yeah, because I'm stuck in the paper for now, the 314 day, I'm nearly certain was discussed in the March, and I felt like the short was okay, but actually the long was super appealing. And part of the long being so appealing was just, you know, we kind of like fell, you know, like I think we were kind of strong. We roll over and then we just really flush down here, which was a pretty huge retracement. And so you were able to buy the turn on break of 2-minute bars and catch like a decent bounce long, if I'm not mistaken. So I think like the short was okay, but the long was actually even better in my memory. And if my memory serves correct, on 227, like one, this is just day 2 and of this kind of big expansive move, and I don't recall this having anything intraday that really appealed to me. But I'll double check once I can get into a normal account. And if I end up changing my view on that, I'll just like post somewhere.
Okay, perfect.
Yep. What else for me, guys? Any final questions?
I had a question.
Yeah.
If no one else had one, you had a tweet earlier in the month that I thought was really interesting, where you talked about Brandon S's monthly review from SMB Capital.
Yep.
And you talked about how the level of detail was a predictor for trading success and how it reminded you of another other successful traders. And I know you ran an office. Can you kind of speak to that and why that's important and how that kind of plays into trading success, if you don't mind?
Yeah, and I think, yeah, it's many things. Like I think when you do a long review, assuming it's authentic, it speaks to many things. Like first of all, you have selection bias, where it's like the person doing a long review, they clearly care and don't mind putting in the work. Then the other thing is they're also someone that probably has a lot of attention to detail and nuances and is like thinking deeply and genuinely about this stuff. And so as we talk about all these different trades, I'm going through very specific nuances about the geometry, about the volume, about what the Bollinger Bands look like, about whether there's news, no news, what does the daily look like? So I think to do well at this stuff, like you really need a discerning eye. Like I think most people struggle because like I can do 7 videos on the bouncy ball pattern and lay out, okay, these are all the specific criteria that are needed for the bouncy ball pattern. Then someone will be like, oh, see this SOUN? It's just like the bouncy ball pattern. And you're like no, it doesn't actually meet the criteria. Like these things are super, super, super nuanced, and you need all those nuances to actually have edge. Like if we were to do the analogy to a poker hand, like what your cards are in your hand is such a it's meaningful, but like just as meaningful to the cards in your hand is like what's your position, what's your position, what's your chip stack, what do you think everyone else has, how aggressive have other people, what's the skill level of them. Like there's so many other variables on any given hand beyond just like the cursory surface level, and I think trading's the same way. And so I think what really happens is like it shows that these people have attention to detail. It shows that they're putting in real deep thought. It shows that they're like willing to do the work. And so a lot of these traits are the things that are necessary for success. Now, I think that obviously gets negated if you're doing it just kind of like if you're doing it and just like making it busy work where you're like, oh, wow, if I have a 15-page review, I'm going to succeed. So then you just purposely do like 15 pages of like images. Like obviously that defeats the whole like that defeats the underlying principles. It's like, this person enjoys it. They like doing the deep work. They're doing the hard analysis. They're reflecting objectively on their trading. Then the other most important part is like, it's not just about, you need to do the analysis, but then you need to do it far enough to reach the full conclusions. So there was someone at SMB this month, and I think I might have tweeted this out, and he got like 90% of he generally does incredible work, really good experienced trader, and he got like 90% of the conclusions right, but then he never ended up at that final destination, right? It's like at point Z is where all the prizes, where it's like you only get the treasure chest if you get to Z. Everything else is like on the path, but Z is where like the progress is. And like take, and again, I'm going to do another sports example, even though I really have no idea what I'm talking about with this stuff. But like, say you're a golfer and, oh God, I don't even know which is which. Say you've got a draw. I think a draw goes that way. I don't know. But say your ball's going that way. The first step is to identify, wait, like wait, I've got an issue. My ball always goes that way. Then the second question is to ask, why is my ball going that way? And you need to analyze your swing, and you need to watch tape of your swing and figure out like where the club face is at contact and all those other things. That is part of the path to point Z, but that's still not sufficient. You've done a lot of the good work, but none of that work matters if at the end of the day, you then don't figure out, wait, this is why the ball is doing that. It's because of the club face is doing this. But the most important part, it's all for nothing unless you say, this is what my club face needs to be doing. And then more importantly, you drill and fix it until that's what your club face does. And so a lot of people won't do any of those steps. Like they're not self-aware. They're not doing the analysis. They're not figuring out these solutions. And so this trader was able to say, oh my God, like part of my issue was this was what my club face was like at the ball at contact. But he didn't do the final step of saying like, wait a second, like this is how I need to fix it to make my game better. And then of course you need to implement it. And so those are the things that matter at the end of the day. It's like if you hit a golf ball 15,000 times, like 15, I don't care how many times you hit the golf ball, right? If you hit a golf ball 15,000 times and you do the same swing and it draws 15,000 times, you can say, oh, I practiced 400 hours, but who gives a shit? You did the same thing wrong 15,000 times and your muscle memory is now 15,000 strokes worth of you doing the wrong thing. You literally damaged yourself, right? Like, yes, you put time in, but the time was the opposite of effective. It actually hurt you, right? So but what's important is putting, like, if you said, hey, Lance, I didn't do 15,000 swings. I did 100 swings, figured out what the problem was, and then did 400 right ones. That's a million times better than the person that has done 15,000 swings, right? Of the wrong swing. And it's like, even the most impressive thing would be the person that was like, hey, like once I made this mistake 4 times or 5 times, I did 10 swings. Every single one of them had a draw. So I said, wait, stop. I need to fix this before I do another swing. Then I figured out how to fix it. Then I fixed it right away. That's the most important thing we want to see. Like, who's the person independently identifying these issues, analyzing them, posting solutions, and implementing them? Like, that's the person that makes the fastest progress, right? Like, doing 15,000 swings earns you nothing but like a dumb, like, effort medal. And that's really what trading comes down to. Now, keep in mind, if you're using your time effectively and if you're efficient, as long as your time's effective, more is the better. But like, the point isn't to just work for the sake of work, right? I'd rather take the person that swung 5 times and found the issue and fixed it than the person that spent, 10,000, the quote unquote 10,000 hours, right? So I think that's what happens with a lot of these traders is they're the people doing the deep work and the deep introspection. And the faster and more effectively you find those solutions, and then implement the solution, that's who makes the most progress. And like, there's tons of people that conceptually know what they are doing wrong, but until you're actually making the right thing, it doesn't matter. It's all for nothing.
Fire. Thank you.
Yep. Any final question before we wrap it up?
I got another quick one. This is not really trading related. It's more like investing related.
Yeah.
I was just wondering, what are your thoughts on like a long-term investment portfolio? Like my philosophy is pretty simple. It's just dollar cost average into an index. And then if we crash, just keeping some type of like extra cash to try to average into. But I was wondering your thoughts.
Sure. I mean, normal disclaimers of, I'm definitely not a money manager. So not investment advice, yada, yada, yada. Yeah, I mean, I think that's super smart at the end of the day. But like, I mean, actually, in general, it's not good to give this advice, I think, because actually it could be super dumb. Like the hard part with financial advice is it's so specific to the person, right? So it's like, I can be like, oh my God, of course what you're doing is totally smart. But what I don't know is that like, you literally don't have any savings whatsoever and you levered your house to be dollar cost averaging into this, and you've got 7 kids that are going to college next year, in which it's like, wait a second, oh my God, that's actually an awful idea. So like, or let's say that's your plan and you're the type of person that when the market crashes, you just go into total utter panic mode and you head out at the bottom. Then it's actually a bad idea, and the answer is, oh my God, you need a money manager to make sure you don't do that or something. Or so I would say most financial decisions, it's really so specific to the person and their goals and their situation. But do I think dollar cost averaging in an index is overall a smart thing for people's nest egg? Yes. But then even to add to the complexities, I spoke with one trader who's a very he's a young low 7-figure trader, and he asked me about investing in something, and I actually said like to your question, right, it seems totally rational, but then with this guy, for example, I ended up he wanted to invest in something, and I'm like, dude, like, wait a second, like I actually think that's dumb. Like, given your trading success and your track record, like you need to just be maximizing the growth of your trading portfolio. Like we both agreed once I asked him all these questions that no investment would ever have anywhere close within reasonableness, anywhere close to like his actual trading returns. And so in that case, it's like, dude, like that would be super dumb for you to invest in this because it's illiquid and all these other things. And it's like the returns aren't even going to come close to what you could do if you just invested in yourself. So even simple questions like that are hard. But do I use some portion of my portfolio to dollar cost average into I have like tax advantaged index funds that just help me harvest losses a little bit more effectively given my situation, and I can donate the winners, whatever. But the gist of it is, yes, I do I do that to a pretty large degree. I do think most young people try to beat the market. And I'm not talking about like day trading, right? If you have edge day trading, great. But I do think most young people, including traders, like so many people at Trillium would be successful traders and think, oh, teehee, I can beat the market in my personal account. And they would get hosed and they would lose so much money and so much compounding because they just wouldn't dollar cost index in, or the other thing that happens is people waste mental capacity and they spend all these times worrying about this investment or picking this stock or doing all this crap when their time would be so much better spent on their day trading. So the beauty of doing an index fund and even just blindly dollar cost averaging and not even thinking about this or that, like if you're really serious about trading, you want to minimize all of those decisions and just get all your focus possible on your day job. In fact, I think for the average person, it's like do just a blind index fund and just focus on your day job. Like most people's biggest leverage is simply in their actual job. So yeah, that's my very convoluted answer.
That makes sense. Thank you.
Yeah. Any final things from there? Otherwise, yeah, I'm going to keep on trying to do this monthly. I think we've had a zillion pretty much until we don't have good questions every month. I'll just keep on doing it and posting these because we've had a lot of good ones. It's fun. It's good seeing you guys. So any final things? Also, just because I saw briefly some side chats. Yeah, thanks for all the support for Magnum Opus and all that. I do think at some point, yeah, maybe in once I get the first couple drafts, like I will probably do something to have people that are willing help me proofread some of these or think of like, oh, Lance, wait, you're missing this point, or like this was confusing. So the other thing that I haven't said is I will end up doing some type of discount, assuming I can't imagine there's going to be any I'm sure the web platform will allow it, but I plan on just doing some decent discount for anyone that does want to do the non-free portion for all the longtime Patreon supporters, which will be nice. And so yeah, thanks for all the support, everyone. And anytime I don't answer like DMs or whatever else, there's just so many platforms between YouTube, Twitter, and like this where it's like all my spare time. It's like I do think that this course is going to help tens to hundreds of thousands of people. So it's like every hour spent doing like Twitter replies or YouTube replies, I just recognize it as time where it's like, hey, I have limited time that can go towards the course, so I need to be pretty good about just getting stuff in the right place. Unless any final things, thank you guys so much for attending, and I will throw this online and then I'll start getting started on the April top ops. Cool, gang. Thanks everyone, and
Thank you.
have a good one.
Hey,
Thank you.
see you Thursday. Have a good day.
Thanks, lads.